expiry. Now there are some other terms in banking that we will come across. Right, the other terms, we have bank overdraft, we have out of date checks, dishonored checks, and we have bank lodgement. Now our overdraft, right? Now when we look at the chapter on classification of assets, we have fixed assets and current assets. We established that the bank is one of the most unique assets. The bank could either have a debit balance or a credit balance, right? All assets have a debit balance. But the bank, however, which is a current asset, can have either a debit balance, and you will want the bank to have a debit balance most of the time. You don't want to have a credit balance. Because if you have a credit balance with the bank, on the bank, or in your bank, if you have a credit balance, that simply means you have an overdraft. An overdraft, meaning you owe the bank money. You are taking out more than what you have in the bank. So, in layman's terms, in the bank, I have only $20 in my bank account. So if I go to the ATM and I say I'm going to withdraw $100, that simply means my bank account will now go in the red of how much I had. I had $20 alone, and I withdraw $100. My bank account will go in the red of $80. So I'll have an overdraft of $80, right? So the overdraft, according to the book, it says a bank overdraft is a facility provided by the bank where they will continue to make payments from the current account even though there are insufficient funds to cover those payments. You have other things like out of date checks. Now, a check, every check that is issued have a shelf life. Everything in life have a shelf life. Everything has an expiration date, right? So checks, for instance, a check is valid for 6 months. Whenever you write a check, that amount, let's say the check is dated January 1st, that check will no longer be honorable in the eyes of the bank. It will be an out-of-date check by the time July reaches, right? So the 1st of January to the 2nd of July, it's out of date, right? Because that's 6 months after the check has been issued. So the check becomes stale. So students, when you receive your first paycheck, when you get your first job, please don't say I'm gonna put you up in my first check. No. By the time you're ready to deposit that check, if you put it up, that check will be dishonored. Oops. Goes to the next term. Dishonored check. Alright? Alright, anyways. So, stale check, out of date check. So that check is stale. You can't use it because it don't pass the 6 month period. Now we have dishonored check. Dishonored check is when the bank say no, we're not gonna accept that check. To dishonor that check. And that check can be dishonored for maybe 3 reasons or more. One of the reasons we previously explained, the check being out of date, right? So the check is outdated, so the bank will not honor the check. So that check is dishonored because it's out of date. But we'll only call it out of date check. No, the dishonored check will be dishonored because 1. Normally when you write checks, you have people who will normally sign. And those people are called the signatories, right? Some checks might have 2 signatories. and some checks might only have one. In the case of my personal account, I might be the only signatory for my check. So if, for instance, I write a check and let's say my business have two signatories and only one signatory sign on it and you credit to the bank is gonna dishonor that check because only one signatory is on it. Right? So that's one way a check can be dishonored. Another way in which a check can be dishonored is it have errors on it, or it have someone trying to be smart. So you have space when you write your checks. The amount you're writing might be fake. Right, so let's say you have the line here. You have the line here, you have the box there, where you put in the amount. Before you put the dot, you leave a space here. So the person decided to be dishonest with the whole, they try to be scammy. So they put in another zero there. So it look like $1,000. I did not write that on the check, I write $100. And they probably use some kind of technology for transform $100 in words to $1,000. So when the bank see all of this discrepancy on the check, the bank is going to say, no. Something fishy is going on here. You can't use that check. Right? That's reason 2. A check might be dishonored. Reason 3. A check can be dishonored because I'm gonna say, what was I gonna say? Okay, so the check can be dishonored because staying date, there's one. Didn't get the right amount of signatories. 2. Something fishy going on. Oh, I remember now. It can be dishonored because you don't have the money. The business who gave you the check don't have money in the bank. So guess what's going to happen? That check is going to bounce. It's going to bounce. So they pay you $1,000 from their checking account. And guess what? They don't have $1,000 in the checking account. They only have $10. So when you carry the check to the bank is going to dishonor that check. And they're going to confiscate the check. Then they're going to send back the check to the person who issued the check. Why? Because they don't have enough funds. And there's a term for that, and it's called a bounce check. You know, like when you throw a ball, the ball bounce back. Right, so the check bounce back to who give the check. Right? And those are the terms. Next video, we're going to do the calculation, we're going to look at the revision. So, thank you very much. Peace.